In this video, we're going to be talking about a powerful strategy called the bear power strategy for crash 1000 index. This strategy is so powerful that it will make you grow your small account into a big account. Okay, I'm going to share with you how you can use this strategy successfully. All right, now we know that the crash and boom market is not like the step index or volatility 75. This market is mainly traded by the use of technical analysis, price action strategy, and the use of indicators to help you see the next price movement. All right, so now what we're seeing right here is that we have technically three indicators on our trade. Okay, these three indicators are called the BS power indicator, the stochastic oscillator, and the D-maker indicator. Okay, now what we're seeing right here is that these three indicators combine together to give us a powerful strategy called the BS power strategy, right? All right, now how do we go about this to be successful with this type of indicator? Now we're going to be taking only buys. We're going to be buying the market only. That is the bearish candle. Okay, the bearish pattern we're going to be taking. We're not going to be taking the bullish. We're not catching spikes. We're not trading the spikes, right? We're going to be just buying the market. Okay, now you can clearly see, if you take a look at this market right here, you can see that this trade is currently, these indicators is currently in a box. Okay, just as you see right here, in a box shape indicator, a box shape line. This is the stochastic oscillator, followed by the D-maker, which is this green line right here. Then the third one is the BS power. So I'm going to change something right here on the D-maker line right here, put this on 2 pixels, right? Then I'll click on done. Okay, perfect, so that we can see. Now you can use the 4th zoom level or the 3rd zoom level on this trade analysis so that you can see the how clear the market is, but it doesn't really matter because all these indicators are inside the stochastic oscillator. Okay, so it doesn't matter the zoom level you are using, okay, as long as you know what you are doing and you can see the market chart perfectly. All right, so guys, what we're going to be doing right here is that we're going to be placing a buy. Okay, we're going to be placing a buy inside the stochastic oscillator. Okay, this is the BS power. This black line right here, this black trend line, is the BS power. So we're going to be taking a buy inside the stochastic oscillator. Okay, then when the BS power touched above the D-maker line, which is this green line, when it touched the D-maker line above or at the side, which is the right side, we exit from that market. You can either take up to 5 candlesticks or 10 candlesticks. It doesn't matter if you take 10 or 5, okay, as long as it touched that line, the spike is going to come into the market immediately. So that's what you should watch out for. So what you want to be doing right here is that you can take either 5 candlesticks or 6 candlesticks depending on how you see the market condition. Okay, you take 5 candlesticks, then immediately you see that it has touched the D-maker line, which is the green line, you exit the market to avoid the spike. Okay, now take a look at this point as well. You can see that all the spikes happened outside the stochastic oscillator. All the spikes, take a look at this point right here. Okay, I've set these parameters to this level so that you can see how perfectly it is. This is the BS power inside the stochastic oscillator, and this is the D-maker line as well. All right, and we can see that at this point right here, the market began to buy. Okay, you start to buy, you place your buy at this point, although it started at this point, but the reason I said you should buy inside the stochastic oscillator is that at the downside of the BS power, which is outside the stochastic oscillator, spikes can come into the market. So to be on the safer side, you can place a buy at this point outside, but to be at the safer side, always place it inside the stochastic oscillator trend lines. Then you exit immediately it touches this green line. You can see that the green line comes first before the stochastic oscillator. All right, so immediately there is a touch at this point right here, you exit the market. You can even place it here at this point, then you count 5 candlesticks, then you exit and you wait for another opportunity to even be more safe on this market. Okay, I've taught this strategy and it works perfectly. Then if you want to catch the spikes, although I said in the beginning of this video that we're only buying the market because this strategy is called the bear power strategy, right? Only the buys. But if you want to catch the spikes on this market, all you need to do is just for you to wait until this bear's power touch this level right here. This bear's power touch this green line, which is the maker line. When the bear's power touch that green line, the spike is going to come in. You can see that at this point, this is where it touched. Then the next step was a spike. At this point, this is where it touched this line, and the next step was a very big spike. Okay, so you can wait for this opportunity whenever you want to catch spikes on this market on crash 1000 index. But if you are buying the market and you want to avoid the spikes, after taking about 5 candlesticks, I always say take 5 candlesticks so that you'll be safer on the market, because no strategy is 100%. The spikes might still come into the market and take away all your profit. So you want to be as safe as possible on your trading chart. Okay, and you want to put a close attention into that chart. You don't take your eyes off the market, because with a blink of the eyes, the market might go the opposite direction. Okay, the market might go the opposite direction. Now we're doing this on the 1 minute time frame. Let's check how this can also work on the 1 hour time frame. Now we have gone onto the 1 hour time frame just to check how this strategy can work on the 1 hour time frame. All right, what we're seeing here is that it's not possible. Okay, the reason I said it's not possible is because it's not giving us a good structure, right? It's not giving us a good trend line structure. So you can only use this strategy on the 1 minute time frame. You can't use it on the 1 hour time frame. But although you can always confirm your entries at the 1 hour time frame. Now we can see that this market has sold right here. So the next step is for it to buy. And if we zoom out clearly, we can see this market is at the overbought, right? So as the market is at the overbought level, the market will drop in price movement, meaning that after this green line, after this buy, the market will sell again. So that is a good opportunity. And if we go over to the 1 minute time frame, currently on the market trend line, we can see that market is at the upward trend and it just spiked. So we are seeing a drop in price movement in this market. Now let me zoom in clearly. This is the current market trend, just to show you how perfect this strategy is. If you trace it, guys, with me, from here is the spike. You can see, trace it downwards, guys. This is the red line. It touched this red line after the green line. So you can see it's not like this is real, guys. This is live, right? Live trading, you can see. And here is the green line. You can see that after I touch this green line, whenever I touch it, you exit the market, because what's coming next is a drop in price movement. And we're also seeing another drop in price movement because the market is at the overbought position. So I hope you found value in this video. Now I've not showed you guys the parameters. For stochastic oscillator, we're using 6 on the period, on K period, the period on 4, slowing on 3. The method is exponential, price feed slow, price feed low/high, levels 22, 80 and 64, the style 4 pixels and the color black. The main 4 pixels and black color, signal 4 pixel and red color. Then for the BS power on period 14, the style on 4 pixels, color black. Alright, then you click on done. Simple as that for that parameter. Then the maker line, period on 14, level 0.3 and 0.7. So you put 0.3 before 0.7. The style on 1 pixels, the color white. Then you click on done. Then the style right here, you put it on 2 pixels. You use the green color so that you can differentiate this market chart. So this is how this indicator look like on your chart. This is how it's going to look like on your trading chart. Okay, so hope you found value in this video that I've shared with you. Do well to like and subscribe to the channel, the Daily Forex, for more awesome trading tips and strategies. All right, I'll see you guys on the next video.